Ladies and gentlemen, welcome to FinFluential Media. It is I, the most interesting man in the world, and we got quite the show here for you today. We are going to talk about gold, guys. We are going to talk about gold. We're going to talk about the market, the recent correction in the S&P 500, and what it means for you as an investor, and will it get worse? We're going to talk about Trump's tariffs and why the market is doing what it's doing. And ultimately, we're going to look at some price targets and even some winners of this year, as well as a recent winner, Ulta Beauty, dropped their earnings. They were up 6% yearly after hours. We're going to talk about, is Ulta a buy or a sell? But everybody, welcome again. It's FinFluential Media, your number one source for news in the financial markets. Guys, I want you to do something for me. I want you to hit that subscribe button. That would be awesome. Simply because I don't ask you guys for anything, okay? I don't have an email list to sell you. I don't have a newsletter. I don't have a sponsorship. I don't have any software to sell you guys. So all I ask is just hit that subscribe button. It's imperative that you go ahead and subscribe, because small channels grow off the subscribers, because the YouTube algorithm needs you to subscribe so that they can recommend my content to the next person and help this channel grow. Now let's get into it. We had a pretty red day in the market, guys. The majority of sectors were in the red today, except for consumer goods, mostly staples, right? Utilities and telecom services. So, just defensive sectors are really just winning, and everything else, stuff like tech, software, IT, financials, all just, taking it on the chin today. So really, we just saw these defensive sectors outperform, and insurance was flat. Insurance is sort of a defensive sector here in the finance space. So very, very clear risk off sentiment in today's trade. The S&P 500 officially enters into correction territory. We hit the peak here at 61.44. The official close today was 51.21. That's about a 10.4% pullback peak to trough. We are officially in correction territory. The S&P 500 has gone 15 consecutive sessions without back-to-back gains. This is one of the most on record ever since 2020. I mean, if we have a couple of more red days, we could actually see very close to, 19 days without consecutive days of gains. Now, will this correction turn into a bear market? Now, a bear market is defined as a pullback peak to trough of about 20%. From where we are right now, it would represent about another 10% pullback. Generally speaking, only 75% of the time we enter a bear market after we have a correction. So the majority of the time, in fact, the super majority of the time, we don't enter a bear market. So look, based on probabilities, this 10% correction is actually where you want to be buying. You want to take advantage of this dip. Now, the reason why we're falling has to do with tariff. Now, we're just going to run down all of the tariff impacts that this Trump administration has implemented or yet to implement. So, in effect right now, to China, 10% on all imports, 25% on all imports with Mexico, and for Canada, 25% on most imports, a lower rate for energy imports. Trump also added an additional 10% import tax for Chinese goods. So right now, China is sitting at a 20%. Now, Trump has suspended tariffs for goods that fall under the United States, Mexico, and Canada trade agreement. These are partially suspended, and I do believe there is negotiations happening behind closed doors. In the tariffs that went into effect this week on the 12th of March, 25% on aluminium and steel. This was a global tariff. So the planned tariffs up April, we're looking at agricultural products as well as foreign cars. And I believe reciprocal tariffs go on the 11th of April or the 2nd, one of those two dates. But we're not sure what these tariffs are going to be. I would say anywhere from 10 to 20%. We just had Donald Trump today saying that he will put on a 200% tariff on wines, champagnes, and similar goods from the EU if the 50% tariff on whiskey is not removed effective immediately. So we are firmly in a trade war here, and it's US versus the world. And as a result, we have seen gold outperform. In fact, Macquarie Bank raised its forecast $3,500 per ounce in 2025. This is in response to Trump's tariffs and as well as the political uncertainty, as well as the geopolitical uncertainty that's taking place right now. Gold officially hit the 3,000 mark in today's session. So a $3,500 price target would represent about a 12 to 13% increase from where we are today. So absolutely insane. We'll see if we get there. at the same time as we are getting gold price target raises, the S&P 500 is also getting downgrades. Goldman Sachs downgraded the S&P 500 year-end price target to 6,200 from 6,500. And the details are Goldman Sachs lowered its 2025 year target for the S&P 500 from 65 to 200, from 6,500 to 6,200, a reduction of approximately 4.6%. This adjustment reflects a decrease in the fair value forward PE multiple from 21.5 to 20.6, citing increased policy uncertainty, particularly around tariffs and concerns about economic growth and the outlook for the economy. So we're seeing a bit of price downgrades, but the S&P 500 today closed at 5,500. So Goldman Sachs still seeing a material increase from where we are right now, but we'll see if more downgrades come in. I believe Yardeni Research also downgraded the S&P 500, but I couldn't find an exact note on them. However, the S&P 500 is down 10% peak to trough. There are definitely some winners. S&P 500 winners year to date. CVS Health Corporation up 44%, SanDisk up 40%, SMCI up nearly 40% as well. We also have Philip Morris, Gillette, Vertex, Texas Pacific Land Corporation, Walgreens, Amgen, and AbbVie. These are all up in excess of 20%, except for Amgen and AbbVie, which is up just under 20%. Respectively. So there's definitely winners here. A lot of these tend to be staple companies and healthcare companies, very defensive companies, except for SMCI. A lot of these are just very defensive risk off sectors, and that is to be expected given the current climate we have. Now, a winner this year that could be a big winner based on their earnings is Ulta Beauty. The stock rose 6.53%, down 4% of the day, don't get me wrong, but up here in the after hours on the back of its earnings. And let's actually talk about it. So the earnings was, I would say, very good to slightly mixed. Ulta management reported $8.46 in earnings per share. They beat by $1.31, a massive beat. There's a beat on revenue by 10 million, but still seeing decreased revenue growth year over year. So the business is actually seeing a decline in growth. Shares are up 4%. Comparable sales increased 1.5% as well. But what the market really wants is the outlook. Now, the major outlook point was this right here. Net sales of 11.5 billion to 11.6 billion. Now, my data shows me that the street were expecting $11.67 billion in net sales for the year. So actually what we saw was a double beat on the quarter and actually a miss for the financial year outlook, but the stock was still up 6%. So it really goes to show what was priced into the name going into this print. He had $300 per share. So the market's saying, hey, you know what? Despite the fact that guidance came in slightly lower than expected and the massive earnings beat, we actually like where it is and we're going to buy. And I think that's going to support the stock. Now, the company is expected to roll out 60 new stores. And it does look like this net sales figure is probably on the conservative side. Maybe that's what the street is looking at as well. They expect that operating margin and diluted earnings per share of $22.50 to $22.90. They plan on doing 900 million in share repurchases, which would be about 7% of the company, and looking at capital expenditures of $425 to $500 million. But is Ulta a buy after these earnings? Let's go have a look. Okay, so Ulta Beauty, let's have a look at some quick stats right here. Let's just zoom in. So looking at the last year, Ulta is down 43% in the last year. Pretty brutal price action. In the last 5 years, up 58%. So the stock definitely seeing a lot of churn in the last year. But these earnings, the market seems to like them. So the stock right now trading on a 12 times PE ratio, 13 times forward PE. That's very, very interesting. A 14 billion market cap. They plan on doing $900 million in share repurchases. They do $11.3 billion of revenue. So it's trading at quite an attractive valuation relative to sales as well as earnings. Now let's go ahead, look at the financials. So let's zoom out here. Company reported for the full year $11.2 billion, mild revenue growth, but down on the quarter. Cost of revenue is $7 billion. So if we actually go to the gross margin section, they have 38% gross margins, 13.85% operating margins, 10% profit margins, and 8% free cash flow margin. Now margins have actually compressed all in all. In 2022, margins were 43% and now 38. But going pre-COVID, they were 37%. So margins are roughly flat. However, operating margins have actually increased from pre-COVID, decreased around the pandemic era. You can see profit margins here as well. Very similar situation. So we see margins increase from pre-COVID, decrease relative to the pandemic. EBITDA of $1.8 billion here. Let's actually have a look at their balance sheet. So the company right now has $700 million cash. That's very interesting. And in terms of debt, let's go have a look. Long-term leases, $1.6 billion. What is their total debt right here? $1.9 billion. So they're in a very, very good position, all things considered. And then if we actually go ahead and look at the ratios, is this a great company to hold? 50% return on equity, 16% return on assets, 22% return on invested capital, and 37% return on capital employed. These are very good ratios. I'd love to see this. It's got an 8% earnings yield, 6% free cash flow yield, and they're buying back and they bought back 4% of their shares. I don't think they pay a dividend as well. EV to free cash flow ratio right now is currently at 15. That's very attractive. EV to sales of 1.4, PEG 1.18. So this is actually a really good company, guys. You got very minimal leverage, great return great capital ratios. The company is not falling apart. They plan on opening more stores. We have seen earnings decrease, but revenue is still looking ever so slightly robust. I mean, against inflation, you have actually seen a decrease. The company is maturing. And if you go back to 2021, you've actually seen revenue almost double in this time period. So it's, this isn't a dying company, and Ulta Beauty isn't going anywhere right now. But let's have a look at what the analysts think. So the average price target right now is 466. That would be a 48% change from where we are. We have a consensus buy rating, and most analysts, even at the low end, are expecting at least some form of growth, 17% appreciation from where we are right now. Do we have an update? So March 10th, we don't have the latest upgrades or downgrades, but we do see here that the average price target is about 500, 445, 480, either a hold or buy rating. No, so actually, no, we do. We have one sell rating from one firm for Ulta Beauty, and it's looking like full year 2025, $11.5 billion in revenue. That would be $24 in earnings a share. That would mean a PE of 12.83. Ulta is expected to see earnings decrease year over year. So that's why the PE ratio increases, but then you should see a robust earnings growth and revenue growth in 2027. And that would put Ulta at an 11 forward PE on FY27. So the company looks like it's going through some form of a transition right here. You could see that the company is doing a lot. Maybe they're spending quite a bit on international expansion. Maybe the international expansion isn't going quite as well as they thought, but the market is pricing in, a return to greatness, I guess, in 2027. Is Ulta Beauty a buy? I would say yes. Ulta Beauty is a buy right now. Great earnings. They plan on opening more stores, and it's actually very, very cheap. If you just look at something like the free cash flow yield and earnings yield of 8.24%, free cash flow yield of 6.83%. I'm sure if you exclude stock-based compensation, you're probably still looking at it very close to 5.5%, maybe even 6% free cash flow yield, earnings yield 8.24%. Very, very attractive. And look at this return on invested capital, 22%. You love to see that, which means I think Ulta Beauty is a buy right now, and it might be a company that I actually spend a little bit more time on. Great earnings. You love to see that. But guys, if you've made it up until here, thank you so much for watching. Go ahead, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.